Tony Zhang, Chief Strategist at Options Play, back with us. Good to see you again, Tony. Good morning.
Good to see you, Oliver. As you said, AstraZeneca getting thrashed, and that's exactly why I think there's an opportunity here.
Yeah, you going for a little value trade here? What's going on? Take me through it.
Yeah, there's really both a timing component that's aligning to the charts as well as a value component that's aligning to the fundamentals. As you said, the stock has absolutely been thrashed, and both in the daily and weekly charts, we're starting to look fairly exhausted here to the downside. We don't really see weekly RSI charts reaching oversold levels very often, but that's exactly what we got. We haven't seen that here in many, many years. So this pullback here is pretty deep, and I think we're getting to a point where sellers are getting exhausted, and I think the risk reward starts to look favorable for buyers, especially as you approach that longer term support level around $60. We had that earnings report come out a couple of days ago that company reported pretty strong pretty strong numbers with regards to revenue, which is always good to see. They've identified a pretty clear key areas of growth with regards to oncology as well as China. But more importantly, they raised full year guidance. And this is really showing a company that's starting to get a lot more confident in their overall outlook here. The numbers came out fairly strong here, and I think that's starting to stem the downside here for AstraZeneca.
I like the fundamental case, one that kind of slipped under my radar this week after reporting on, Tuesday. But that did stand out to me that their guidance, they gave a good outlook for increased. And then also they're spending a good bit, like to your point about the R&D, like $3.5 billion. They're even hiring and expanding the workforce too. So a lot of times those types of things, the market's not really sure about, but the fact that it's found some support here at 65 on that type of spending seems pretty encouraging.
Yeah, exactly. They're expanding their U.S. manufacturing capabilities. I think that's going to align well with kind of the incoming administration. I think these are some of the things that make sense, especially if you look at the fact that it's trading at around 11, 12 times forward earnings, which is a pretty substantial discount relative to its industry. Yet it's expected to grow faster than its peers. It's more profitable than its peers. So I think that you have both, a chart that looks kind of so bad that it looks good, but more importantly, you also have a fundamental story that makes sense from a valuation. We're trading at a discount relative to its peers, but if you look at the underlying fundamentals, it's incredibly strong.
All right. Okay. Well, how do you figure out how high then? You want to play with that gap up to $70 or what?
That would be my initial targets, but I'm really looking longer term, well into the 80s and 90s. So this is definitely a trade that I think for investors who are thinking a bit long term, and even my option strategy reflects kind of a longer term view here. I like to go out to April of next year, which is nearly 5 months worth of a little over 5 months worth of exposure here, and looking out to buying that $65 call option on AstraZeneca is trading at around 65 right now, and this gives you on the upside potential for risking about $450, $460 earlier today. So you're looking at under 10% worth of risk on this particular trade long-term, giving you 5 months worth of upside potential here, unlimited upside potential, while leveraging your capital a little over 10 to 1, because you're controlling over $6,500 worth of equity, if you will, for just a fraction of that percentage. At the same time, you're limiting your overall loss on this particular trade to just about 8% of the stock's value. So if you consider how much the stock has shed in terms of value, I would say 8% of that is a relatively small amount to risk, given kind of the more than 10 to 1 leverage that you get to the upside using an option structure like this versus outright buying the equity.
Okay, like it. So this is in also the long-term chart. I love when you zoom out how it's kind of in generally this kind of longer trend that you're looking for. So it makes sense with the longer approach to the trade too. It feels like giving yourself some time. You obviously got to pay up for the time, but as long as the technical thesis kind of holds at 65, then it seems like a chart that does kind of ask for time.
Yeah, that's exactly right. And, by buying an in the money, longer dated option, you're actually paying less per day in terms of time decay for an
Mm,
option. Time decay is what's working against us in a straight option structure like a long call. And we're trying to minimize that as much as possible. And as the market proves us right, there are opportunities to even sell some calls against this as you approach some short term resistance levels, collect a little bit of premium to further reduce the amount of time decay on this. So there are lots of ways that you can manage this trade throughout, between now and April, where you can further reduce the amount of time decay and really just, looking to buy some upside while selling some premium as you go along the way.
okay. Like it, always well thought out, structured, and paired with a good fundamental analysis that we appreciate. Charts too, 3 out of 3. Thank you very much, Tony.